Welcome to the deep dive. Today we're digging into the London rental market, specifically the data from September 2025.
Right.
And there's this central paradox we want to unpack. Record-breaking rents, but also, surprisingly, really strong supply.
It's a bit of a puzzle, isn't it? High prices and lots of available places. Seems counterintuitive.
Exactly. So the headline figure you should probably know is pretty stark. Average rents hit nearly £600 per week.
600 quid. Wow.
Yeah, that's up 3% just from August, a four-year high, apparently.
It's definite sticker shock.
Yeah.
And that average, it's about 2% higher than this time last year.
Affecting most of London.
Pretty much everywhere, except, interestingly, North London saw a bit of stability. But, stopping at that high rent figure, that misses half the story.
Which is the supply side.
Exactly. The supply side and also these seasonal shifts we always see. What's really fascinating is why those prices stayed so high when supply was actually pretty robust.
Okay, let's look at that. Because September, that's usually when things calm down, right? The summer rush, the student demand, it tends to dip.
Usually, yeah.
So why didn't prices follow that dip?
Well, and the inventory levels were just relentless. New listings, get this, are up 11% year-to-date compared with 2024.
11% so far this year.
Yep. And even in September, when you'd expect maybe a slowdown in new properties coming on, the numbers were strong, actually higher than September last year.
So landlords are still putting places up for rent quite actively.
Looks like it, almost like they're rushing stock to the market for some reason.
Interesting. We'll come back to that maybe. But if supply is that strong, okay, help me connect the dots here. High supply usually means less pressure on prices, maybe more tenant choice. But the prices are record high, so competition must still be fierce. Is that it?
Well, that's the twist. That's the really counterintuitive part. Competition actually eased off, quite significantly, in fact.
Eased off.
Applicant demand, the number of people looking, dropped 32% from August to September. That's your seasonal slowdown finally showing up.
Okay, a 32% drop in demand.
Yeah. And because of that, the actual market competitiveness metric, basically, how many new renters are chasing each new property listed.
Right.
That fell by a huge 38.6% in just 1 month. Massive drop.
Wow. So hang on. In August, it was maybe, like a pressure cooker? Over 20 people fighting for every flat.
Potentially, yes, in some areas or types of property. Very high pressure.
And by September, that dropped to around 13 renters per property?
Roughly, yes, 13 per property. Still competitive, mind you, but a huge difference from over 20.
So prospective tenants suddenly had, actual choice, more breathing room.
Exactly right.
Yeah.
It suggests, that maybe a more balanced market is starting to emerge. Strong supply meeting slowing, though still present, demand.
Okay, but I'm still stuck on the price. If competition eased and people had more choice, how are average rents still hitting record highs?
Yeah, that's a fair question.
And I saw a detail, something like 63% of renters actually found places under their budget.
That's correct. Over 63% secured properties under their stated budget ceiling. Only about 30% had to stretch and go over it.
So if most people aren't overpaying relative to their budget, who is pushing that overall average rent up so high?
It's a really crucial distinction. That record average rent, it's likely being skewed, probably by deals happening at the very top end of the market. Super prime luxury rentals.
The average getting pulled up by the high end.
Exactly. For your sort of median renter in the mass market, that increased choice is likely paying off. They're finding places without necessarily breaking their bank, even if the overall average looks scary. Remember, tenants on average spent 98% of their budget, which is high, but that 63% finding places under budget is key.
Right. Okay. Average versus the typical experience. Got it. So let's pivot a bit. You mentioned landlords maybe rushing stock to market. Thinking about the future, is there big legislation coming that might explain that?
Absolutely. That's almost certainly part of the picture. We need to talk about the Renters' Rights Bill.
The big one.
The really big one. It's expected to start being implemented probably sometime in 2026. And it introduces some fundamental changes.
Like ending Section 21.
That's the headline change. The end of Section 21 no-fault evictions. Landlords won't be able to evict tenants easily without providing a specific legally defined reason.
And the shift to rolling tenancies, too.
Yes, that's the other major part. Moving away from fixed terms to rolling tenancies as standard, meaning contracts just continue unless ended for one of those specific reasons. It really shifts the dynamic.
So it changes the risk calculation for landlords, potentially quite significantly.
Precisely. And you could argue this surge in supply we're seeing now is partly Landlords reacting to that future uncertainty, maybe getting properties let under current rules while they still can.
Okay, so let's summarize this for everyone listening. September's market was complex, still very expensive. Those average rents are high.
Undeniably high.
But, crucially, less competitive than the month before. We saw this unexpectedly strong supply meet easing demand.
Which gave tenants a bit more breathing room, more choice.
Yeah, for the first time in a while, it feels like that high supply actually started to take some of the edge off the price pressure for people looking.
A slight rebalancing, perhaps.
And here's the final thought for you to maybe mull over. That choice, that high supply we saw in September, it exists now before the renters' rights bill really bites.
Right, under the current system.
So if landlords are indeed listing properties now, partly because they're worried about things like rolling tenancies and the end of Section 21, what happens to that supply, that tenant choice, once the new rules are fully in place and the incentives for landlords change? Where does the market go then? Something to think about.